redistributing wealth, then you're attacking my freedom because I have the right to own, what I inherited. If you tax the income which comes from that wealth, then you're still attacking my freedom.
We are an incredibly wealthy country. Despite the lies that we have no money, it's just not true. We're an incredibly wealthy country.
Poor people are the ones that benefit most from public services. So if you are cutting there, there's no way you are taking care of them as per your constitutional mandate.
Welcome to another episode of Economic Justice Matters, brought to you by the Institute for Economic Justice. South Africa has huge gaps between rich and poor, but government still won't raise taxes on rich people. With the new budget update coming soon, we ask why. Today, I'm joined by Lisa Mdutyana from the Institute for Economic Justice, as well as Thoko who's from Wits University, and we're also joined by renowned economist CP Chandrasekhar to break it down for us. Thank you so much for joining us all. Lisa, maybe we can start with you.
Thank you, Susan.
How would you situate where we are in terms of our budgeting in South Africa?
So, I think I would like to go back maybe a decade where there was really the period of economic stagnation start to set about.
Sure.
So economic growth, I think after the global financial crisis around 2008, 2009, it was expected to rebound at some point. That never materialized because growth just kept on being slower than what was expected. And this motivated the National Treasury to go ahead with what is called the fiscal consolidation. So this is them tightening the belt, trying to make sure that spending, they try to align it with the revenue growth. But with the economic growth also low, it means our growth in revenue is also low. So spending then was suppressed over the past decade. And it's a tragedy because that is happening in the context where unemployment was high. It is happening in the context where inequality was still high and is still high today. And those things were not resolved. And it was envisioned at some point by the government that the state would be the leader in trying to solve these issues. But what has essentially happened, because the budget has been tightened so much, the state has in effect been unable to play any significant role in fixing these issues, and has in actual fact said the private sector should be the one that comes in and fixes these issues. So that's the context of the budget. That's why there is so much contestation, because there remains a poverty and hunger, and yet we have a government that is saying, no, but we don't have the money. We don't have the money for it. And that is that's alarming. That's alarming when you consider the revenue raising options that South Africa has, and which is why we have, as a civil society, as a labor, have been pushing the government to look at these alternatives and make sure that the state has the financial muscle to actually get us out of this crisis.
Thoko, would you agree that this is kind of the status quo at the moment with the difficult growth environment that we face? The answer seems to be to cut rather than to think more boldly.
So the interesting thing is that the politics behind the budget is really what tax comes down to. And one of the reasons why it's really exciting to have this conversation today is that often the conversation is around expenditure. So Lisa has rightly pointed out that the government spending has been cut, has been subdued, has been reduced. But interestingly enough, the revenue side of the story becomes quite interesting and has been taken off the table for a long period of time until we had the VAT crisis, when suddenly Treasury discovered that, people are interested in tax. We should be consulting people around tax, because really, up until this point, South Africans have not been paying that much attention to the changes in the way in which the state has decided to raise revenue post the 2008 crisis. And it's in that picture that we see some very interesting developments. One of them is that we see a cut in the corporate income tax. So we decided at a point when there was a boom prior to the 2008 financial crisis, when we had a commodities boom, we said, we're doing really well, and companies, in particular mining, is doing really well. Let's cut their taxes to give them a spur of kind of, they're going to invest. If we cut the tax, they're going to invest. They're going to create jobs. So there's also this myth, this mythologizing around how growth will happen. And so fiscal consolidation as a policy has this underlying mythology that if we cut taxes in a particular way, and then redirect the way in which we raise taxes. So we're going to cut corporate income tax. We're going to make sure that wealthy South Africans, given our high inequality in this country, we're going to ease the burden of super wealthy, and I'm talking super wealthy South Africans, only 45% tax, when in some countries the top tax brackets, were taxed 60 to 70% during tough times. So this isn't, you don't have to look very far to see that you can tax, and we have taxed wealth globally and locally. But we said no, to spur economic growth again and employment, we will shift and play around with personal income tax, and we will move the tax brackets in such a way that those at the top end actually have, since 1994, are now paying less tax than they did prior to 1994. And then finally, interestingly enough, and this is the real kind of dark horse, is that they went for indirect taxes, which is value-added tax. And so we saw a value-added tax increase a couple of years ago. It was only by 1 percentage point. But even so, they were aiming for a 3% at the time, with the argument that it would fund the national health insurance. That's why we had to get behind it. And then we see levies and taxes and so forth. But we saw that in Treasury's terms, and it's a global policy shift, you'll see it across countries, this move to value-added tax, increasing value-added tax. And so they were wanting to get it up to 17, 18%, which really means the majority of South Africans will now bear the burden and the cost of managing the tax framework in this country. And so it's poor South Africans who are now being asked to fund the very limited, ailing, poor services rather than the wealthy South Africans.
Prof. Chandrasekhar, I mean, South Africa is not alone in taking some of these political decisions when it comes to budgeting, focusing on cutting, but also actually disproportionately raising taxes on, in some ways, the poor, as Thoko puts it. Talk us through some of the wider context beyond South Africa where this is happening.
Well, I'd like to first start with this whole this argument, which of course I've heard, but you all should know better, that when income is low, you don't have the revenues to be able to undertake expenditures. So you need to cut your expenditures, because otherwise you'll end up with a large deficit. So that's a strange causality, that you're basically saying that, there's a certain amount of income that generates a certain amount of savings, and that gives you a certain amount of revenue and investment. Whereas the way in which, we tend to look at it ever since the Great Depression, ever since the Keynesian Revolution, is that it's investment which drives income. It's not income which drives investment, other than for, individual corporations. So this whole idea that we are stuck because of the fact that growth is bad and therefore we don't have enough income to actually be able to undertake large expenditures is, to start with, problematic. It's a kind of causality which is inverted. It really doesn't capture what really is the problem. The second issue is that of course, how do you okay, if you want to raise in a situation of low income growth, and given a certain level of per capita income, if you want to raise government spending, how can you do it? And we know that there are, there's taxation, which of course is both indirect and direct. Indirect is, as everybody says, is more aggressive than direct taxation, which is progressive. And then, of course, the government has the right to be able, uh, assuming that it doesn't have very large revenues from public sector enterprises so that it generates its own surpluses out of its productive activity, that it has the right to actually borrow in large measure and spend, because of the fact that having the right to tax means that in future, even if today, because of the low growth, you don't want to suddenly hike taxation significantly and create incentives to invest, is what they would argue, you still have the right to do it tomorrow. So if you can actually undertake by borrowing large spending and generate increases in income, you can tax those incomes, particularly to the extent that they accrue to the wealthier, and use that to actually meet your liabilities on your debt, which is your interest payments and your amortization. So, it works both ways. But you cannot say that you have countries in which you cannot spend because income is low, because firstly the causality is wrong, and two, if you want to know how to finance that spending, I mean, you've got these options, and these options can be exercised even when income growth is low, because of the fact that it actually increases income and therefore increases your flexibility, including your ability to be able to service your debt. So I think it's basically an ideological argument. It's not founded on any economic logic.
Lisa, I mean, one of the key proposals that departs from what we've been doing for as long as I can remember is to actually tax those who have the most wealth and money.
Yeah.
A wealth tax. Why do you think this is something we should consider more seriously? And what about some of the objections about the practicality of a wealth tax?
Yeah, maybe let me start with the objections first. It's coming largely, or again, from the National Treasury. The one is that there will be tax evasion. So we'll find people that have high net worth move their assets to other countries so that they escape this tax. And so the logical conclusion from that is not that you shouldn't tax wealth, is to say, how do we limit the evasion? How do we minimize evasion? And already there are systems in place that have started to first of all try to gauge the amount of wealth that is present in South Africa. So SARS, for example, has a high net wealth individual unit, which was instituted, I think, about 3 years ago. That's a start. The other, of course, would be the fact that you want to be able to control the inflow and outflow of finance or capital in the country. So the interesting thing about the past decades is that we have seen these barriers kind of go down. So it's much easier to move money in and out of different countries. So that's an important gap that you have to close. Again, evasion can then be minimized. The second thing is that, while this will lower private investment, again, it goes back to what the Prof said. The investment does not, the flow is, it's irrational how they think about it. It doesn't come, you don't go from savings to investment. You go from investment to income, which then generates savings. So that is flawed just on economic grounds. And then the third thing is that supposedly there will be a relocation of businesses who will be scared by taxation of wealth, because of course their beneficiaries, which are shareholders and people like that, would be affected. And I think my issue there is that are these the kinds of businesses we want in the country? Do we want our country to be exploited in terms of infrastructure and resources, and then not have these businesses pay their fair share in taxation and wealthy individuals pay their fair share in taxation? So for me, all of those arguments are non-starters from the end of the Treasury. And then in terms of the practicalities, well, we have blueprints worldwide. So for example, following COVID, a lot of countries in Latin America put up a wealth tax, a solidarity wealth tax, to try and raise revenue. We saw that the administrative costs for doing that were quite low. And one of the interesting things, one of the programs that they tried to set up is like an amnesty thing, where if you did maybe flee with your wealth offshore, we are going to give you amnesty. Just declare, tell us what you did. That's fine. We will not arrest you. We will not punish you in any way. And that motivated a lot of high net worth individuals to bring back their wealth and actually pay. So administratively, we know it is doable. It is absolutely doable. And then
Well, let me
Yes.
come to
Sure,
Togo,
sure.
and we'll build on some of the examples as well, because what Lisa says is very interesting in terms of the objections that are raised around how this may be wonderful in theory but simply won't work in practice, and how empirical evidence suggests there are actually examples of how it has worked just recently. What do you make of the objections, and do you have any further thoughts on examples that disprove them?
So I think the important thing is that in terms of when we're talking about a wealth tax, people get very nervous and they think we're talking about the average South African who pays tax, right? They
absolutely.
think you're coming for me in my house.
Even the small business owner
small
starts to
business
think,
owner.
oh no,
So
I've just started.
People get a little bit. And so the research that we did at the Southern Center for Inequality Studies was looking at a range of income thresholds. And one of the income thresholds was earning above 300 million. So we're not talking about the average South African.
Chance would be a fine thing.
We're talking about a 1% potential increase in tax off their earnings that they wouldn't even feel. And so the irony of this story is that we have incredibly powerful players saying you can't tax us because we'll leave. And we won't pay for government services because there aren't any decent government services. So we're in this double bind, and we're not convinced that this economy is healthy, so we're not going to invest in it. So just like the Prof was saying, it becomes this very, very kind of confusing story in the South African context, because we have a bust, things are really bad, we're cutting government budgets, and then we're surprised that the private sector is not investing. And then we're terrified to tax them, but we're happy to borrow from them. So our borrowing payments, our repayments on borrowing, which is essentially the same group of people, is now the number one category of spending before education and health. Yes. So one of the big shifts that has happened that we've been arguing over time is that we have chosen not to tax the rich, but to borrow from them at incredibly high interest rates. And so it becomes this bizarre situation of being held to ransom. And if you read Treasury's documents, they are concerned, rightly so, and terrified by the markets. Who are the markets? That 300 million rand South African that I'm talking about. You know, that to get to a point where someone like George Soros, just from an international example, says that he pays less tax than his PA. That is the bizarre situation we're in. So to change the story does require international collaboration, absolutely. But the idea that taxing a ultra wealthy individual, and one of the suggestions and in 1994 as part of the conversations was an apartheid solidarity tax of about 3% over 5 years. Just to show that everybody benefited from the system. So we have this really bizarre situation where we don't have the resources necessarily to be able to deliver the goods that we need. We have people in this country who do have the resources to deliver the things that we need, and yet we can't tax them. And so, and that comes down to an ideological issue around what Lisa was saying is, where is the role of your solidarity as an ultra wealthy individual living in a country? Because this idea that you are living independently, magically of the same water, the same roads, the same electricity. So nobody is free of other beings in their ability to amass wealth. So just the last point is that it's also very, very difficult to move wealth, actually, because the Stellenbosch mafia are not going to be able to move their wine farms to Botswana because of their assets, their land. So even when we talk about this fear mongering of them leaving, what exactly are they? Yes, they can take their paintings, they can take their fancy cars, but one of the key things, as Lisa kind of alluded to, they can't easily take their factories. They can't easily take their wine farms. They can't easily move their properties because it's property wealth. And also, they will get taxed in the South African context if they try and move their money out in terms of so we would get money anyway. So, we would benefit if they tried to leave. We would get tax out of that. But it's unlikely. So even the fear mongering around these high wealth net individuals are going to just up and leave, or they're going to up and leave. And those assets then can return to South Africans or, people who not South Africans, but people who are interested in investing in this country genuinely, as opposed to those that are just not doing anything really and then saying, don't tax me.
Prof, this idea that we've been canvassing here about the impossibility of raising taxes on the wealthy. What are your thoughts on that objection?
That comes from people who have the argument that if you want to reduce inequality by actually redistributing wealth, then you're attacking my freedom because I have the right to own what I own, what I inherited. And now you extend that to say that if you tax the income which comes from that wealth, then you're still attacking my freedom because that income is due to me since I hold that wealth. But but I think there's a larger issue here, but that if you look at what has been happening over time in most capitalist economies, you find this increasing dissociation between movements in income and movements in wealth. Okay, and that's because of the fact that we've moved to economies where valuation rises much faster. The valuation of wealth, in particular, the valuation of financial assets. Now, even if you say that there are some difficulties in imposing taxes on real wealth because you can have controversies about how you value this wealth. I mean, how am I going to value a piece of land or the assets in a factory and so on? Is it going to be the book value? How much depreciation and so on? You still can do it. But even if you have that argument, there's one thing which you can quite easily argue because the market does it for you, which is to be able to value financial wealth. And the dissociation between income growth and the growth in wealth or asset ownership essentially comes because of the fact of the increasing role of financial assets in the hands of the really wealthy, the top 1%, or whatever we want to whether we want to draw the line. Now, I think this is also important because of the fact that you not only can easily value and tax that, and even if you impose a small tax. I mean, Zuckman, I think, has calculations where you put a 2% tax and you get so much money that you can actually deal with a huge huge number of the problems that we confront. But the other thing which we must recognize is that people tend to say that, listen, what are you talking about? This is just paper wealth. I mean, it can disappear. You can have a stock market crash, or you can have a crash in the bond market, and this wealth is going to disappear. But if you look at it historically, every time we've had a crisis, you never get asset values going back to where they were before the crisis, because they start falling, and at that point of time, the state intervenes to prevent it from falling further, because you want to save the banks, you want to save the financial investors and so on. So you have this ratchet effect, where wealth keeps increasing even if it actually is characterized by fluctuations. So which is why you have this peculiar situation today where you don't know where this wealth is coming from, because it doesn't come from productive activity. Yep. In such a society, if you say that we are not, and where people are making money while they sleep virtually, because you don't have to do anything to get this increase in valuation. If you don't tax wealth, you're basically saying that you're leaving this purchasing power, because so long as markets are liquid and protected by the state, you can convert your financial assets into real assets as and when you choose to, so long as you have liquid markets. And therefore, to allow this to continue is basically to allow a kind of tendency in terms of inequality, which is far greater than what is inherent in any capitalist economy. And therefore, in today's world, taxing wealth has become even more important than it used to be. It was important in any case, but at least at that point of time, people could have all of these strange arguments about a tax on freedom. Here, the only freedom you're going to attack is, as I said, that you can't make more money while you sleep. That's not acceptable because it affects the way the rest of the economy functions.
Thoko, let me come back around the other way and come back to you as well, Lisa. Because in South Africa, we've got a big moment ahead of us where we're effectively updating the budget. We all remember how much of a crisis just getting to this budget was in April and May of this year. Yeah. You've done some interesting work in actually looking at how the rhetoric of budget speeches and medium-term budget speeches, which is coming up, has changed. Can you give us insight into that as we approach this new phase going forward with this important budget announcement?
Yeah, so it's been really interesting. I've been looking since Lisa mentioned the fiscal consolidation, which in other terms is called austerity, which is the idea that, by cutting government expenditure, by reining in debt, that will spur the private sector and, rainbows, bunnies, and horses. It's all going to be a happy story. We've been doing that since 2012. And we haven't seen an improvement in the economy.
We are the case study.
We are the case study. We haven't seen any improvements in the economy. We haven't seen improvements in investment in infrastructure. Now, the reason why I highlight that is because one of the foundation narratives is that we were going to cut the budget, but we were also within that going to redirect funding away from the public service wage, away from goods and services, into strategic infrastructure. That hasn't happened, and so we haven't seen the mirroring of the private investment in infrastructure, which is the bedrock of our economic program since 2012. That's in summary. I mean, it's a little bit more complex, and they use very flowery language and economies, but in a nutshell, that's essentially what has been said. And so we see that kicking off the 2026 budget process, we don't see a different narrative. We see, in fact, an almost hunkering down of this fiscal consolidation with a very worrying narrative of, seeing as what happened with the VAT, we have no options around tax. And because we no longer politically, and some of the writing that I've read, they've said, I quote, politically, there is no appetite among South Africans, I'll come back to that, for taxing. We need to cut because we still need to be on this path that requires us to reduce our debt to GDP ratio, because that is a good, wholesome, neoliberal way of spurring the private sector. And as the Prof said, that's ideological. There's no economic basis to that argument. Now, the reason why I come back to the question around no political appetite around paying taxes is, in fact, the New Economy Hub did a study on South Africans' appetite for taxation. And they came back saying, yes, we would be very happy to pay taxes and to make sure that people pay their fair share of taxes if it means that we get good services. So yes, the good services is always an important rider, and no one's going to critique that. Yeah. But the assumption coming out of Treasury that now our fingers have been burnt on the VAT question, value-added tax question, means that, tax is off the table, which means wealth taxes is off the table. And what we have to say is, no, tax revenue is not off the table. It is part of our mix, but there are questions around the cost of capital, so how much we're paying on our debt, how much it costs for small businesses to be able to get loans. All of that becomes an important mix in the question. And essentially, as the Prof has pointed out, the kind of signaling, because it hasn't been finalized yet, but the signaling from Treasury is very much fiscal consolidation. So despite the fact that we're the most unequal country in the world, despite the fact that in some of our neighborhoods we have a 75% youth unemployment rate, despite high levels of gender-based violence, we have failing infrastructure. People don't, our office doesn't have water here in Parktown today. So despite all of that, despite it looking like this is an economic downturn where you would expect state stimulus, a stimulus effect. No, we're cutting, which is completely counter to any kind of evidence coming from the post-war period, even for some countries post the 2008 financial crisis. The stimulus actually helps build the confidence that's needed for the jobs and so forth, and also to protect a public service and to protect services that should be public, like water, electricity, education, health, because by cutting, we're pushing those into the private sector, which is pushing poorer families having to pay for things that they should really not have to do so.
Lisa, your thoughts on where we're heading and this medium-term budget policy statement?
First, just to say, I think we're also being a little bit flowery on saying, Treasury, what they're saying has no sound economic foundations. It's lies. They're lying. They're lying. Because the Minister of Finance, Inokodongwana, I think he came out last year to say, now we admit fiscal consolidation did not actually result in the reduction in debt to GDP as we expected. Well, it was never going to do that, because if you are shrinking the size of the state, you are also having a negative impact on GDP, which means your debt will grow faster than your GDP. Even if your debt is declining. So it's lies, and it's repeated lies. And the interesting thing, especially when we talk about exploring other tax avenues, is that we saw in 2023, so there was a lot of advocacy among civil society and labor that there's a gold and foreign exchange contingency reserve account that the government should use. Of course, their instinct was to say, no, we can't touch this. It's undoable. And yet, following political pressure that eventually came, they actually ceded and they used it, and it came out to very good use, because it allowed the government to increase its spending much more than it had initially anticipated. So it's the same with the taxation. We cannot continue believing the lies that there are no other revenue raising options. So I think that is what we should be focusing on as we head towards the medium-term budget policy statement, because again, we will be told there is no room. We just have to cut.
Be strong.
Yeah.
Sacrifice for the nation.
Sacrifice for the and
the allies.
And it's curious who actually sacrifices, because if you are going to put up a VAT, who is actually getting the most damage? If you were to compare a VAT, a VAT, and a net worth tax, where does the harm go mostly? So actually, the sacrifices have been made by poor people, not through just the proposed increase in VAT, but also through the spending cuts. We know, obviously, poor people are the ones that benefit most from public services. So if you are cutting there, there's no way you are taking care of them as per your constitutional mandate. And then lastly, the recently interesting thing that came out this week was the ANC's Economic Action Plan, which in some regards is, it's ambitious to some regards, because they say now we are going to scale up public employment, such as the EPWP programs. But on the other hand, they are not saying, okay, this is the revenue which will raise in order to scale these programs up. So it's clearly an economic policy that will not be realized. Again, it's more lies.
Prof, I mean, I think as we conclude, I'd just like to get your final thoughts on where to from here and what some more optimistic futures might look like if we are a bit more creative and ambitious in the way we rethink some of the economic dogmas which have crystallized in many different parts of the world.
Yeah, speaking of the medium term or long term, and I think we should put this on the table, that where does this emerge from? Because if you look at it, let's start with, that neoliberalism is the frame within which, this kind of austerity comes. Now, why does that happen? One, you start with trade liberalization. Now, trade liberalization doesn't just involve a reduction in non-tariff barriers, it actually means a reduction in tariffs. You want your tariff levels to reach some international standard, and that standard is nearing zero. So you're basically saying that you're going to give up a whole range of avenues of tax generation or revenue generation because of the fact that you're not going to impose tariffs. Because if you impose tariffs, then you lose your competitiveness vis-a-vis other countries. In order to be able to sustain trade liberalization, you need financial liberalization in order to bring in the finances which will finance the current account deficit. And if you actually have foreign investors coming into your economy, at all points of time, the state is forced not merely to look over its shoulder at its own wealthy, but also all those foreign investors who've got legacy capital accumulated within your country. And you say that, listen, if I impose taxes, that money will run away. We'll have a balance of payments crisis. So you're basically saying that, what I need is a combination of tax forbearance, which is direct tax forbearance, plus you don't want to tax wealth, because if you send out a signal that I'm going to tax wealth, it will be read as a form of expropriation of assets. And therefore, the fear which governments have is that, this money would go out. So you actually have a situation now in many instances where even when progressive governments come to power, get elected to power, they come on a platform which actually says we're going to actually impose taxes on the wealthy and actually generate the revenues in order to be able to have programs of the kind that was mentioned, which the ANC is now saying it's once again saying it's going to do. But the point is, once you're in power, you don't want to do it because you're scared that you'll actually precipitate a crisis. So I do think that we are not merely talking only about taxation. If you want to actually do the right thing in terms of tax and revenue generation, then you must actually begin to undermine the neoliberal frame. In particular, you need capital controls. If you have an open capital account, which brings in foreign capital, which is footloose, then the ability of the government to exercise its right to tax in order to spend, to be able to improve the lot of its population, gets undermined because of the fact that you're constantly fearful that you're actually going to have a balance of payments crisis, and therefore you use that as an excuse not to do it. So I think when we talk about the medium term, while we should be emphasizing taxation, we should be emphasizing progressive direct taxation, we should be emphasizing wealth taxation, etc. We should also constantly place on the table the idea that so long as you remain within a framework of neoliberal policy making, you're caught in a trap, and you need to actually address that as well simultaneously in the medium term if you want to break out of this.
Thoko, your thoughts on the future and what could be done if we relaxed some of these constraints and we lifted our gaze beyond these narrow assumptions which have been pinning us down for so many decades?
I think my hope is to have, call a spade a spade. It would be nice to have some National Treasury officials with some guts, who can stick their necks out. And in some ways, South Africa is in a position, in terms of our wealth, we are an incredibly wealthy country. Despite the lies that we have no money, it's just not true. We're an incredibly wealthy country. The reality is we're not harnessing. Ironically, we're only harnessing that wealth for the very wealthy, as the Prof has outlined in terms of this neoliberal framing. So my hope is that we actually shift the gaze away from prioritizing a particular class of people to prioritizing the base. And to say that this is where we get our wealth from. It's from the men and women and children in this country that drive this economy, that will help us in the climate crises that are on the way. I mean, it's not if, but when. And so we need, in light of kind of what we call in the gender responsive budgeting framing, a good budget that really tackles issues around care, around climate. And that entails big picture thinking about the role of the state and coming back to seeing the role of the state as being a player in the economy, not just this kind of small referee for wealth. Yeah. So my hope is that we just get some brave voices, because I know they're in there. I know there are voices in our Treasury Department, in our economic decision-making spaces, that can see that what is happening is not working, and that there are opportunities, and we do have opportunities for better policy making in the budget space.
Yeah. Lisa, since the IEJ brought us here, you get the final say. Your hopes and thoughts for where we could go if we are bold enough to do so.
I think because South Africa is a country such rich in potential, there is much hope that if our government were to be bold, we could go very far in terms of, we are such at a low rank in terms of development. We are much lower than we should be.
Yeah.
We are not using our resources appropriately. As Thoko pointed out, we have a lot of wealth. We have a lot of human capital. We could have more, but we still have a lot. But the government that we currently have, operating under the ideological framework pointed out by the Prof, neoliberalism, that is currently there, will not allow us to realize that potential. So I think what we can do on our end is to continue again to expose the lies and tell the truth about what is possible in the country. Thank you, Caesar.
Absolutely. Thank you, Lisa. Thank you all for joining us for this wonderful and fascinating discussion.
Thanks for having us. Yes.
Absolutely. Thank you, Prof. And to you, the audience, like, share, subscribe. By the way, check out the IEJ's newsletter if you're interested in these conversations. That's a further deep dive into economic alternatives for South Africa. Help us get to our next milestone of 400,000 subscribers, and keep it locked on SMWX. Like, share, subscribe, and we'll see you on the next one. Aye.